But lots to talk about. Let's also bring on board Mahesh Patil, Fund Manager at Birla Sun Life Mutual Fund. Mahesh, hi, morning. How is it that you're mapping the market environment? US equity is supportive. The RBI policy on expected lines, but the hawkish tone, does it worry you at all?
Yeah, as you rightly said, the RBI policy was on expected lines. I think while RBI governor sounded a bit hawkish, you also mentioned that inflationary expectations, they'll monitor over a period of time, and at least for the near term, we don't see any hike in interest rates. Our internal expectation is that you will see moderation in inflation as you go down. Even core inflation with a lag effect could see some kind of easing, and that should hold on, interest rates should hold on at these levels. But I think more importantly, I think is the outlook going forward, whether we are seeing a slight revival in the economy going forward, which is what is important from a market standpoint. And clearly, I think on the global front also, we have seen that India, related to the other emerging markets, is also coming out from a phase where we have seen the last 2 years when things have deteriorated, the margins starting to improve. So I think that should be supportive for the market in the near to medium term.
So, Mahesh, at a time when RBI is sounding hawkish, we don't know what will happen to earnings. Globally, things are looking shaky, and election is the big overhang. Do you think in the current environment it is difficult for markets to go higher? Markets are moving up because of momentum. They are not moving up because of news flow or triggers.
Yeah, I think in the near term, admittedly, if you look at, because we'll have now the quarterly numbers coming in for the fourth quarter of FY14, and one doesn't expect any meaningful upside in those numbers. So I think purely from a fundamental standpoint, one doesn't see any triggers. And I think the market we've seen a sector rotation also. The broader market, while it has moved up a bit, we have seen pressure on sectors like IT, pharma, because of rupee has appreciated, and some of the cyclical sectors have done well. So I think that sector rotation will continue. That should keep the market upside in check for some time. But I think clearly, despite the run-up what we have seen in the recent time, I think if you take a medium to long-term view, next 2 to 3 year view, clearly we are in a phase where we are seeing a cyclical recovery. And that's what I think investors should be looking at rather than looking at the recent run-up in the market.
So Mahesh, let's talk about from now up until next month, which is when we are going to see a clear verdict in terms of the election outcome. Does it seem like the market is going to go one-way move and that is going to be up, or do you think it could be a volatile and bumpy ride ahead?
Well, whenever we move into a big event, so election again is a big event this time because a lot of attention is focused on that, because that could change the trajectory in terms of the economic revival also and for the market. So in that scenario, I think until that event happens and the result is out, one should not see any more volatility, because people who take position based on the results would like to wait until the outcome happens. So I don't see until the election results, you should see a huge volatility, barring any thing happening on the global front. I think post-election is where you could see volatility depending on what the outcome is in line compared to the expectations which built up during the run-up to the elections.
Mahesh, before the election verdict, we have Q4 numbers, and there is a serious probability that Q4 numbers will disappoint. Do you think markets currently are bothered about Q4 numbers, or no one frankly cares about what India Inc. has done for the quarter gone by?
Well, I think Q4 numbers, as you rightly said, yeah, I mean, market would tend to discount those numbers because, again, you're looking for a big change post the elections, and that's what there is a hope that you would see a turnaround. So given that expectation which has built up, and people taking those views, at least from a medium to long-term view, I think these quarterly numbers wouldn't matter much. But having said that, individual stock-specific, where there is a significant disappointment, you could see markets reacting, because we have seen a run-up in some of these stocks much ahead of expectation and much ahead of the ground reality. So in those stocks, if there is a significant disappointment, you could see some reaction. But by and large, I think if there is a slight disappointment, I think market would tend to ignore that, because that would not really matter from a slightly next 1 or 2 year perspective.
Mahesh, stay with us. Just 3.5 minutes left to go before we kickstart trade for this Wednesday morning. Mitesh, I want to come to you for your trading ideas.
Apart from the calls in morning, I would recommend a buy on Hexaware with a stop at 154 for targets of 170. United Phosphorus is a buy with a stop around 188. Look for targets of 202, and a buy on J&K Bank, buy with a stop below 1550, slightly positional kind of a call, and look for targets of 1780 on the upside.
Okay, here's a quick recap of what Ashwini as well as Sandeep too have been recommending this morning. And Ashwini's got a buy on Rajesh Exports, J&K Bank as well as the stock that he likes. Jacob, Bombay Burma Trading, SKS Microfinance and Arvind Limited. These are all buy calls from him. Sandeep Agle again an all buy list. J&K Bank, Dabur, FTC, Gati as well as UPL.
Mahesh, coming on power stocks, and when I say power, not just power utilities, power ancillary, power producer, power financer, power sector in India is yet to bottom out. But the way power or power related stocks are moving up, it appears that markets are of the assumption that the worst of the print for the power sector is behind us.
Well, on the power sector, I think the key challenge has been we have seen linkage issues, availability of fuel has been one problem, and there are other power projects, where we have seen that tariffs, which had been quoted at a higher price, they are unable to fulfill that obligation because of the rise in the input cost. And there are third set of power producers, where they got financial problems because of high leverage. So I think the companies where the tariff was an issue, we have seen some relief over there after the CRC order, and while the market the matter is still under arbitration, it's the same, but I think there is likely to be some relief over there, at least from a borrower standpoint. In companies which have banks which have lent to these companies, I think they should be able to recover the interest payment over there. The second issue is about availability of fuel. So we have seen some FSAs have been signed by Coal India, and that should ease some amount of stress over there. And if at all we see some emphasis in terms of mining and revival in terms of domestic coal production, that should be good. But on the flip side, we have seen even the import coal prices have come down significantly, and some of the power plants which are positioned near the coastal side, they are able to import coal and fulfill their demand. So I think overall, if you look at the sector compared to say a year back, we have seen some improvement over there. And
I'm afraid
so I think,
I'll have to interrupt you there. We are 40 seconds away from the market open, and as always, just before the bell, let's get you one idea each. Ashwini, your number one idea for the day.
See, the first idea is, if the bank nifty opens above 12,660, which seems to be the case, try to get back into bank nifty to play a swing reversal. And in terms of individual stocks, SKS Micro, that's a buy with a stop of 210, target of 232.
Mitesh, what about you?
Yeah, I will choose a Tata Motors DVR which broke into fresh all-time highs, buy with a stop at 205 for targets of 225.
Got the technical ideas from our experts. Indian markets are up for 9 days on the trot, and given the kind of global cues we are working with, it easily could be 10, and I think it is 10 already. 35 points up for the Nifty, not a bad start. 67.58 for Nifty, 33 points up. Let's look at individual names, and I reckon that IDFC, LIC Housing Finance, these are the names which would be right up there. There you go. Unexpected lines, IDFC 130 rupees, LIC Housing Finance 3% up. There is enough and lot of price action in L&T Finance Holding as well. Now, the underlying news is very simple to understand. Bharti Airtel, SBI, Punjab National Bank, Infosys, Bank of Baroda, HCL Tech. So, for a change, IT and banks today are on the same side of the trade. IT, which picked up steam yesterday, there is some buying there, and there is definitely some element of short covering in PSU banks, which yesterday had a poor session. What are the losers? And even though it's not a big grand start for the Nifty, the Nifty profile is very solid. Axis Bank down 10 rupees. That's it. Asian Paints almost at break-even point, and Sun Pharma at 572 flat. So the biggest gainer is still IDFC, and the biggest loser is Axis Bank, followed by BPCL.
Bajaj Auto just came out with its monthly sales data. It's been a mixed bag of sorts for the entire industry. Bajaj Auto sharply lower, down by about 1.6%. Lots of other newsmakers in trade. I want to first see what the banking license contenders are up to, considering now the Election Commission has given a go-ahead. So look at the move on IDFC. Not that it had already not run up, but it's a 5.25% uptick that you're currently seeing on this one. Shriram Transport Finance as well, 1% higher for the stock. You've got LIC Finance, you've got L&T Finance Holdings, LIC Housing Finance, I meant. All the other contemporaries, or contenders rather, are the ones which are holding up very, very smartly in trade. The Supreme Court is going to continue hearing Reliance's KGB basin case today. Reliance, while it's been completely undeterred and unperturbed by any sort of news flow, Reliance today has started off just a wee bit soft, or so to speak. Watch out for SpiceJet as well. That is one another stocks which is going to be in focus. I want to see what the high flyer from yesterday, Gati as well, is up to. J&K Bank is the other one which should come for you on your screens. We were just chatting about as to how Gati, of course, has seen deal action. J&K Bank, it's already at a fresh high, has seen huge delivery-based buying, and today as well, 2.25% uptick. Of course, the technical experts as well are fairly bullish on J&K Bank. Not just that, a couple of other names that you would want to look out for. Mahesh Patil, again a huge land deal, and ASK Properties acquiring Pune land parcel for 160 crore rupees. Mahesh Patil, 3.5% uptick is what you're seeing on this one. And you've also got Aurobindo Pharma, which has completed the acquisition of select Western European business of Actavis. Aurobindo Pharma is holding up by about almost 7/10. This, of course, has been a high flyer. Axis Bank, wherein RBI says the FII limit has been hit. They cannot buy more. Axis Bank, predictably then, down by about 1.25%. Same is the case with South Indian banks as well, because FIIs now need the RBI approval to buy South Indian banks shares, considering the trigger has been hit. But this stock seems undeterred, 2.25% up in the green right now.
You know, Escorts yesterday had a strong close, and the dispatch numbers for the month of March for Escorts were strong. So that one is at 121. Now, the big surprise factor also has come in from Hero MotoCorp. So Bajaj Auto has struggled. For TVS, the base is low, but on a large base, Hero MotoCorp has come out with good set of numbers, and markets really are rewarding that, because the stock has moved in quick time from 2000 to 2200, and the reaction is there on your screen to March dispatch numbers. Stock is up 15-16 rupees. Mahesh, do you think two-wheelers or two-wheeler dispatch numbers are a big surprise at a time when auto sales are slow? Hero MotoCorp, TVS, Bajaj Auto, the two-wheelers have managed to grow in a tough environment.
Yeah, I think two-wheelers, yeah, we have seen, again, this sector has also seen a slowdown. We have seen almost like 1.5 years where the sales have been flat for the industry as a whole. And we have seen some size of revival. We have seen the excise duty cut, okay, which was done a couple of months back. So that benefit was passed on to the end consumer, and that could have led to some revival. But I think from here on, I think slowly we should see some revival as we move forward into the next fiscal year. In the second half of next fiscal year is where we see a revival in the overall auto segment, because we have seen now almost, we'll be seeing 2 years of flattish kind of, that's the longest streak of flat volume growth we have seen in many years. So I think as confidence comes back, we should see a revival overall across two-wheelers and across passenger cars.
Okay, meantime, the banking license contemporaries, they are the ones which are holding out very, very positively. IDFC, by the way, is the top notcher in the futures and options universe. That stock is holding out very smartly. The April futures are now up 4.25%. 129 plus levels is where IDFC is. LIC Housing Finance, L&T Finance. The top movers in the futures and options space are all the banking license contemporaries, or contenders, I should say. Mahesh, what is the sense that you're getting? Anything out of this basket that you like, and does it feel like before the news is going to happen, these stocks would have already run up a fair bit and priced in everything?
Well, I think there's a kind of a mixed opinion, okay, on companies or companies which are going to get banking license, because in the initial period, okay, it will be a bit dilutive in terms of ROE, because of the kind of obligations they will have to meet, both in SLR, CRR and the priority sector obligations. So in the near term, next 1 or 2 years, assuming some of these contenders get the banking license, it will hurt their earnings. But longer term, it should be good in terms of building the liability franchise. So I think investors, who have a longer term would look this positively, but in the near term, clearly there will be some pressure. So I think there is a mixed kind of reaction, which you could see from market participants for some of these companies, which could get possible banking license in the next few weeks.
Mahesh, but in general, are new bank license bad news for banking sector per se? New bank license means more competition, more market share fight, perhaps a pressure on NIMs, and maybe the new companies could go all out when it comes to grabbing market share.
Well, I think we don't believe it would be anything negative for the sector as a whole. Obviously, I think the market, again, it will take time for some of these banks. Even if they get licensed now, it will take another 15 to 18 months for them really to start operations. And the ramp up would have to be gradual. There is also a strict obligation, in terms of they can't choose, the places where they want to be. They have to also have equal amount of branches in some of the unbanked areas. So I think given this scenario, and the fact that you would see the market itself is pretty vast and growing, and to some extent I think there will be a shift from the PSU banking space. We have seen that in the last 10 years the market share of PSU banks has gone down slowly towards the private sector bank, and that trend will continue, I think, with some of these new licenses being issued.
While Aurobindo Pharma, it's been gaining for a second day on the trot. We were just talking about this 1.25% move. It's now seen a price volume breakout. Aurobindo Pharma, 0.3 shares traded already within minutes of opening bell, up by about 1.5%. Good going for this one as we speak. 542.15 is where the stock is right now. Mahesh, what's the sense that you're getting about the pharma pack as such? Of course, there is the big overhang of the US FDA clampdown. However, there are stories like in Aurobindo which continue to chart their own path, continue to be sitting at, all-time highs.
Yeah, as you rightly said, the pharma sector, I think the broader outlook for the pharma sector, if you look at companies which have got decent exposure to the developed markets, US, Europe and LATAM, I think there the outlook looks to be pretty reasonable. Again, as you rightly said, it has to be company specific. Look at companies, what is the product pipeline in terms of new product introductions, which could drive growth in the next 1 or 2 years. So I think that is something which one has to look into before looking at the pharma stocks. I think these one-offs in terms of US FDA clampdowns, and that's a risk, which the sector has. But I think for that reason, one has to really look at companies which have got good practices, manufacturing practices, and bet on those names. But I think the recent correction, what we have seen in some of the pharma names, I think makes it a good opportunity, because the valuations are now looking reasonable, and we don't see any change in the earnings trajectory. Some of the leading pharma names, we expect them to grow at around 15 to 20% in that range, which is pretty healthy kind of a growth in the current environment.
Mahesh, not as a momentum player but purely as a fundamental watcher, are you getting some degree of discomfort given the kind of run-up cyclicals I've seen? And in the run-up to the election, if cyclical stocks or economy-related stocks, if they appreciate more, would you be a seller there?
Yeah, again, when you're playing some of these cyclicals, you have to take a slightly longer term view. Agreed, I think in the initial phase, I think we have seen a big run-up in some of these stocks. But if you believe that you would see we are the bottom of the cycle, and you see a slow cyclical recovery from here, and the election outcome could accentuate that or accelerate that kind of a pace of recovery, then I think one has to still stick on to some of these names, because getting entry and exit in some of these stocks, some of the mid-sized cyclicals, is very, very difficult. We have seen the impact cost is very high. There is not much of liquidity. So I think while one wouldn't jump to buy at these levels, but clearly where we have been positioned in some of these names early, we would like to hold on, carry on to play the whole cycle rather than trying to make an early exit.
Take a look at Idea Cellular as well. That too has given you a very good breakout, and it's been gaining now for a second day on the trot. 2.5% higher. 141 is where Idea Cellular is right now. Good going in terms of both price as well as volume. Mahesh, what's the sense that you're getting about telecom? Because, you know, the street seems pretty split and divided on the prospects of telecom. Some feel that the worst is now over, and some would rather stay away because of the regulatory hurdles which keep coming now and then.
So I think in the telecom sector, I think the regulatory challenges are more or less behind us. We have seen the spectrum auction. Okay, it was slightly higher in terms of the pricing, okay, which one was expecting. So there will be some burden on some of these companies in terms of the higher debt. But I think clearly there was some concern about the competitive intensity, whether you could have another Reliance Jio coming in. But that will take some more time. I think in the interim, I think the call is whether the increase in spectrum cost would be passed on in terms of tariff hikes. If that happens, then it could be good for some of the telecom stocks in terms of improvement in their revenue per minute. And we have seen some hikes, I think a couple of days back, the leading, one of the leading telecom players increased tariffs in Mumbai circle. So if that happens across the country, I think that could be for earnings driver, at least from a near to medium term perspective.
Natco Pharma. Now, what shook the foundation of Natco Pharma yesterday was, of course, US Supreme Court's decision to admit Teva's appeal on the generic version of Copaxone. Now, that's if Natco Pharma is barred from coming out with the generic version of Copaxone in May 2014, that's a big setback for the stock. But I think there's a big buyer in the town today. The stock corrected yesterday by about 10% plus, and it has managed to pop right back up. Only 5.5%. It's 5.5% up. So it lost 10% yesterday, and it has managed to regain about 50% of what it lost yesterday. Mahesh, give me a flavor of some group or some stocks which you are happy to own irrespective of the election outcome, and you are committed to maintain your exposure there.
Well, I think clearly getting into this kind of a phase, okay, where the outcome can change, can lead to volatility. I think we are comfortable owning stocks, okay, where we are reasonably sure about the earnings trajectory, where we are comfortable on companies where the balance sheet is very strong, because we have seen a run up in this market. We have seen all the stocks moving up, even companies with high leverage, okay, which were beaten down have moved up. So I think so those companies would still be vulnerable, because we are not seeing any big correction in interest rates, and high interest cost will, if the economic recovery or this thing is slower, then some of these companies could face real challenges. So I think really still focusing on better quality names, even because those are the stocks which could still hold on despite there could be some volatility, but the downside risk would be limited, and where there is decent visibility in terms of earnings growth over the next 1 year. I think those are the kind of stocks where we are comfortable owning, despite probably the multiples would have expanded over the last 2 or 3 months.
Take a look at Aurobindo Pharma, by the way. That is now at a fresh high for itself. That's holding up very, very well. It's a record high that Aurobindo Pharma is currently seeing in trade, 2.5% higher. Doesn't seem like this stock is in any mood to pause anytime soon. 547 and still counting high for Auro Pharma, and this is just within minutes of opening bell. Ashwini, I just want to come to you on Aurobindo Pharma, because this is one stock that you've been really bullish on, and it's been a bang-on call.
Well, I took it home with me yesterday, and now we are kind of taking money off, but obviously anything that hits a new high is seeing a lot of buying, and particularly in the exporter category, while the rupee is appreciating and the stock is hitting a new high. So all that says a lot for its strength, and chances are it should probably continue forward towards 600, post whatever consolidation it does here. Today is a bit of a pharma day, so Lupin, Ranbaxy, Dr. Reddy's, all of them are showing strength. Meanwhile, on individual stocks, I had mentioned the bank nifty must cross 12,660. That it has not done till now, so it's not showing a lot of strength. So probably that reversal is not to be taken for the moment. But individual stocks, Aurobindo Pharma is a buy with a stop of 536, target of 565. Idea is a buy with a stop of 138, target of 150. CESC is a buy with a stop of 504, target of 530. Ranbaxy is now trading above its 50-day moving average, so that's a buy with a stop of 372, target of 400. And Aurobindo and Biocon for some time, acted in unison. Chances are that Biocon could also follow Aurobindo today. So that's a buy with a stop of 430, target of 455.
Well, the banking contenders sure are the ones which are flying high in trade. Aurobindo Pharma, of course, needless to say, the star performer. And remember, we just marked the price and volume breakout as well in this one. It's now 0.8 of a million shares traded. But yes, as a sector, as a basket, it's the bank license contenders. IDFC, Shriram Transport Finance, LIC, the works, all of them holding out very smartly in trade. In fact, as the Election Commission has now given its green signal to the RBI to issue the new permits ahead of the general elections next month, the central bank may grant licenses to set up new banks within the next 10 to 15 days itself. We or rather are also getting a word from former banking secretary, that's DK Mittal, and he feels that the move may be positive for the sector but won't make a huge impact in the short term.
The whole process of getting bank licenses in India, which is there globally in any other country, there are parameters available, you apply and you get a license. Maybe it takes 6 months, 9 months, whatever it is. So that's a good thing which is coming out of the whole process. In the end, you may get 2 or 3 licenses. That is not going to change the banking space in any substantial way in near future.
Okay, let's also tell you what the bonus and stock game participants then are up to on day 3 of the portfolio game show. Sharmila Joshi, she's got buy calls in Reliance, IDFC, Syntex, JB Chemicals. Vishal Malkan, sell calls in HPCL, BPCL, a buy on Dr. Reddy's, as well as GMR Infra. And VN Giri has retained a Madhasan Sumi, has fresh buys on L&T Finance, Lupin, as well as M&M.